division of AIG. American General Life Company Insurance would be the issuing company for the product we're going to be discussing today, Critical Care Plus. We will be touching on a couple of things. Number one, we'll be talking about why this story is more important today than it's ever been in the United States. We'll touch on some key markets that you may want to approach when it comes to this type of product, and then we'll get into our product build and a couple of different pieces of information at the end of the call. We will open the call up at the end for questions, so feel free to stick around and ask any questions at the end. And like Dave mentioned, I'd also like to invite you to an event later on this week for some additional opportunities on how to market critical illness insurance. So why is today different than last year, 2 years ago, 5 years ago when it comes to critical illness insurance? The biggest answer to that is the Affordable Care Act. As many of you know, there are millions of newly insured individuals in the United States. The Affordable Care Act has required that all citizens now have to be either covered with health insurance or pay the fine. Because of that, this conversation is now not an odd conversation for somebody who's not in the health space to have with a prospective client. Whether your primary line of business is health insurance, life insurance, P&C insurance, or any other type of financial planning, you can actually ask a question like, have you found coverage? What kind of deductible plan do you have? Do you find that you're a little bit nervous about the possible outlay in the event you have a situation that requires more than just your traditional care, like an annual checkup or taking your kid to the doctor for the flu? These conversations are now top of mind, and maybe it's time to talk about critical illness insurance, where in situations of the past where you might have shied away from that conversation. Today it's really a great time to bring it up to your clients. For those of you who are familiar with critical illness insurance, you know that the biggest thing that it does is it offers peace of mind in a situation where your insured is faced with the diagnosis of a condition that is going to require a lot of care. Number one, the funds that are provided from a critical illness insurance will allow them to do what's best for their health, which I think is the most important thing for them to understand. Having those dollars not only allows them to not have to be as concerned about the financial obligations of the care that they're going to receive, but it also gives them many options as to what kind of care they seek. And the other thing it does is helps preserve their wealth. And I think this is the thing that's very important for those of you who are either life insurance sellers, financial planners, etc. The biggest thing that you're doing by offering them this type of coverage is you're protecting them from having to take dollars from other situations like their monthly premiums for their life insurance policy or taking money out of their retirement funds to take care of the situation. You are helping them to plan for these type of things so they don't have to redirect funds from their other financial obligations or their other plans for the future. We talk about life insurance at American General a lot because it is a key component to any financial plan. But the other thing that we all know is that in today's world, things that used to kill us, we now survive. And because of tremendous breakthroughs in medical technology, people are surviving at much larger rates. We'll talk about some statistics on the next slide. But as you can see from the slide in front of you, medicine is saving people, but quality health care does not come cheap. And anybody who's ever had a family member or a friend who's gone through a situation with a diagnosis of an invasive cancer, for example, or a heart attack, they know that although they are surviving, there's a huge financial obligation to that survival. I always talk about stats when we talk about the changes in survival rates and the changes in the nature of the way things work in today's world. I always caution agents to be wary about using stats at the point of sale. Anytime you say 50% of something can happen, the individual insured will always say, well, I'm probably going to be the one on the other side of the 50%. But for me, the stats really help us to understand the framework as to why we're presenting this in the first place. It's more for us to understand why the opportunity is there and why there is really a need for us to talk about this type of product to your customers. 83.6 million Americans are now living with cardiovascular disease. That's a huge number. 75% of those who suffer a heart attack will survive at least 3 years, meaning that in the past, their life insurance plan might have paid their surviving spouse or their children. In today's world, that life insurance plan is going to do nothing for them. If they don't have something in place that's going to give them cash while they survive, they're going to have to find those dollars somewhere else to make up for the financial ramifications of that diagnosis. About 6.8 million Americans over age 20 have had a stroke, and 70% of people who suffer a stroke survive at least 3 years. So we're seeing that survival is real. A couple of additional stats, between 50 and 70% of stroke survivors regain functional independence, but 15 to 30% are permanently disabled, and 20% will require institutional care at 3 months after onset. Anybody who has ever had to seek that type of permanent care for anybody, whether it's an older family member or somebody who has suffered a situation like a stroke, that care is extremely expensive. So having a plan like a critical illness policy in place that puts cash in their pockets gives them the opportunity to pay for those without having to jump directly into the other savings. In 2013, 1.66 million Americans were expected to be diagnosed with cancer, and 68% of those were expected to survive at least 5 years. And the average out-of-pocket cost for cancer patients is just over $1,200 per month. So what happens if they survive these situations? Where are they going to get the funds? Well, typically they're going to have to direct monies that they had planned to use to save for retirement or to pay for their life insurance premiums. That's typically where most people are going to go when they first receive their diagnosis. If they let their life insurance policy lapse, the possibility of them getting coverage again after they get through this situation is very slim to none. It's very difficult to qualify for life insurance when you just had a heart attack or just had a stroke. You can help to protect your customers with another solution, and it's a solution that they probably haven't heard about. And this is really where the difficulty lies for most of us who are trying to promote this product. This is not a product where our insurers are calling us shopping for the best rates. This is something where we're really having to be teachers and explain to them what this policy is, how it works, why it's important to them, and why it's just as important as all the other insurances that they find the money to fund. But we need to make sure that we do not leave these customers exposed. So a couple of things that can help you to prepare the customer for why they need this type of insurance. They need to understand that if they become seriously ill, they may have out-of-pocket liabilities. Even though they now have major medical insurance, they won't know what they are covered for and how much they're going to get coverage for until they have a situation with a diagnosis. One of the things that the complaints that you're going to hear a lot about is the medical networks that their insurance is covering. Those networks are getting smaller and smaller by the day. The likelihood that they're going to have to go to an out-of-network facility is increasing, and out-of-network means potentially more money out of their pocket. And how are they going to pay for these additional expenses? If you were to make sure that your customer had a critical illness policy in place, they would receive a lump sum payment upon diagnosis of one of the qualifying illnesses, and they can use those dollars to do whatever they want to. The money can go directly, it's going to go directly to the policy insurer, so they're going to get a lump sum check, and they have the ability to choose how they will spend those funds. They can use the money to pay for medical expenses. They can pay any other bills that are still there while they're recovering from their diagnosis, just their normal monthly outlays. They can use it to continue to pay their life insurance premiums or pay the out-of-network costs. So they basically have the opportunity to do whatever they need to do with these funds while they're recovering. You know, a couple of things that are going to be covered by traditional health insurance or not be covered by traditional health insurance. The direct costs like the deductibles, the co-pays, the policy exclusions such as experimental treatment, or the out-of-network medical costs. These are all things that are going to be on the insured regardless of what their insurance, their major medical insurance is going to cover. They still need to come up with these dollars. Some of the things that would be indirect costs of the situation would be lost income from work, any lifestyle changes that may occur, increased financial responsibility on the spouse who is not sick, and transportation and lodging for non-local treatment. These are all things that if they had a plan in place and they had dollars infused from their critical illness policy, they could cover very easily with that lump sum check. So that's basically the why you want to begin to approach your customers and your clients with this opportunity. The next thing you want to do is make sure you understand who the best prospects are. Now, we're going to go over some kind of specific target markets right now, but I really want to make sure that everybody understands that the target market really is everybody. This is a wide net that we can go out there with. Middle-income marketplaces especially, they would be the most affected by a situation where there is a diagnosis of a critical illness in their household. Whether it's a married couple, a single-parent household, a diagnosis of a condition like this, most don't have the savings available to get to very quickly in the event there was a diagnosis of a critical condition. So even if you only offer $25,000 or $40,000 or $50,000, whatever they could afford, it's a great opportunity for you to help to protect that family against these situations and to relieve some of that financial stress that could be included in the situation where they're already dealing with the physical stress and the emotional stress. But some specific markets that we do talk about, individuals in blue-collar occupations, high-wage earning professionals, individuals with certain medical conditions like knee problems and situational depression, clients who already have life insurance coverage, and single working parents. And we'll talk a little bit more in detail about a couple of these markets. That clients with life insurance coverage is really a key market. If you think about it, anybody who's purchasing life insurance typically is doing it because something occurred in their life. They purchased their first home, they had their first child, they want to make sure they protect their spouse in the event of an untimely death. They want to make sure they can put their kids through college. They have something that they're already planning for. Somebody like that would understand the value of insurance. So coming to them with another solution that insurance can help them offset some of those dollars or protect their family in the event of an untimely situation, they're a great market to go after. So that's one of the key target markets. But let's talk about some of the other more specific markets. Individuals who are not eligible for disability income insurance. So that's where we talked about some of those blue-collar occupations, especially high risk, stay-at-home parents, individuals with back problems, knee problems, situational depressions, or other situations that won't allow them to qualify for disability income insurance, or small business owners who have not established a level amount of income. This is a great market. So for those of you who are either in the disability income space or work with customers who are in some of these high-risk occupations or stay-at-home mothers, these are great opportunities for you to go to them with a solution that says, look, you cannot qualify for disability income insurance, but here's an opportunity to cover yourself and protect your family with a critical illness policy. We do not have the same limitations that a disability income policy does. Although there is some underwriting to the policy, we don't have the limitations based on your occupation class. A great target market for critical illness insurance. So we've gone through a couple of the target markets, and we can get into more specifics at a later date. But I definitely want to spend a little bit of time on Critical Care Plus. This is American General Life Company's standalone critical illness policy. We do have some unique ways that we approach it versus the competition. So for those of you who are either representing other products out there or who are familiar with other products, you want to make sure that you understand some of the key differences between our product and the competition. American General offers a critical illness policy up to $500,000 in benefits. The minimum policy is typically $10,000 in most states, but we do offer coverage up to $500,000, which means you can now look at some higher end markets, not only just middle markets, but with our policy you can even go into higher end markets. There is an immediate payment upon the diagnosis of a qualifying illness, and we'll talk about our qualifying illnesses shortly. But again, that payment goes directly to the insured. It does not pay to the provider of care. It goes to the insured, and they get to choose what they want to do with those dollars. In most situations, it is a tax-free payment to the policy owner, which is extremely important for those who are concerned about the tax ramifications of having this type of policy. Having a tax-free payment is important. And they do have the freedom to use the policy payout as needed. We talked about that already, but it's important for the customer to understand that they have the freedom to use the funds however they see fit. It will pay in addition to any other insurance, so whether they have major medical coverage or not, whether they have disability income insurance, whether they have any other policy out there, we do not coordinate our benefits. And one of the biggest differences between our policy, and we'll talk about it a little bit more in detail, is loss of independent living benefits. So for those of you who have sold long-term care in the past, some of the language might sound very familiar, but loss of independent living is one of the benefits that's covered by our policy, and we'll talk about how that works in a little bit more detail. So what are the benefits for having this type of policy in place? And we talked about this already, but we'll kind of highlight this again. The insured in this situation, the last thing they want to do is be limited by their major medical plan as to where they seek care or where they get care for their spouse or their children. This allows them to choose the best hospitals and the best physicians. Being based here in Houston, Texas, we have one of the greatest cancer facilities in the world, and there are always people who you find in the medical center who have uprooted their family to seek care here. They would not be able to do that without understanding the financial ramifications, the travel costs, the lodging costs, all the additional costs that they have to pay in order to get the care at one of the top facilities. Having a policy like this helps them to cover those costs. They can elect treatment or services that are not covered by the traditional health insurance. A lot of people like to seek, different treatments that may be new, that may be experimental, and their major medical coverage may not cover it. This gives them the opportunity to do so. I think this is the biggest one, and this is really where I think, when you're selling the story or you're trying to convince the insured or the proposed insured as to why they need this coverage, it's to just continue to pay their outstanding bills, their mortgage, their revolving debts, their monthly outlay. This is really where you can really help them to understand the value in this policy, and we'll talk about the best policy build in a little bit. But you really need to understand that while they're going through this process, their mortgage still has to get paid, the car note still has to get paid, the credit card still has to get paid, the lights, the phone, everything else still needs to get paid. By having these dollars in place, they can at least maybe plan out and say, okay, I know with this policy I have at least 18 months to cover this, cover all my monthly outlays. So any income that I am getting from a disability policy or from the spouse's income, we can use those dollars to redirect to cover the cost of care. A great way to put peace of mind into a situation where there could be a lot of chaos. We talked about experimental treatments, but also experimental drugs or therapies. They can modify their home in the event the result of the critical illness requires that, or they can stay at home for just a little bit longer, and I think that's another important key. A lot of times what happens is people push themselves to get back to work because either the disability income isn't enough to allow them to stay at home, and they rush back before they're fully healthy and fully over the situation. By having this type of check in their hand to give them that opportunity to say, you know what, I can take an extra month. I have the money to take that extra month to make sure that I'm fully past this situation and I can go back to work healthy. So just a little bit about specifics about our policy. Again, the minimum face amount is $10,000 in most states. In a few states, the minimum is $25,000. The maximum is $500,000. It is issued in $1,000 increments, and I will tell you there are some price point breaks in there, so we can talk about that in a little bit. We do allow to cover the spouse on the policy, and we also are able to cover the children on the same policy. So it can either be an individual policy, individual and spouse, individual and children, or the entire family covered with one policy. The rates are male and female rates. There is a tobacco and non-tobacco rate. We do have 3 rate bands, like I said, from 10 to 50,000. 50,001, basically 51,000 to 100,000, and 101,000 to $500,000. One of the things you will see is if you have somebody who you think wants 50,000 in coverage, I would encourage you to quote 51,000. That will give them the price break. Same thing with the 100,000. If they think they can get through full underwriting, I would quote them at 101,000. You'll see that price break, and it'd be advantageous to your customer to quote it that way instead of quoting 100,000 or 50,000 if that's the level of coverage they're looking for. We do have a couple of riders that can be added to this policy. The most important one is the benefit extension rider, which we'll talk about in a little bit. But we also do have the medical personnel HIV benefit rider, the AD&D rider, and then actually built into the plan, I don't know why they call it a rider, is the listing advance benefit for major organ transplants. So let's talk a little bit about qualifying events, because I think this is really the thing that if you are representing another carrier or you are looking at other policies, it may be a little bit of a difference. We cover 12 conditions. A lot of other carriers cover 18, 21, 25 conditions. But what you'll see is that the 12th condition that we cover actually would cover a lot of the things that other carriers are specifically listing. So of course we cover the major 3, invasive cancer, heart attack, and stroke. We cover coma, severe burns, kidney failures, major organ transplant, loss of sight, speech, hearing, coronary artery bypass at a less, 25% of the benefit, paralysis, and depending on whether it's quadriplegia or paraplegia, it's either 100% of the payout or 50%. Cancer in situ or non-invasive cancer, we would pay 25% up to $25,000 for a diagnosis. And then we also built in a $50 per year health screening that if they are going to get specific screenings like mammograms, we would allow them to receive a $50 benefit annually in order to reimburse some of those costs for those screenings. The condition I didn't speak about is loss of independent living. Again, some of our competition might list out an additional 6 or 8 or 12 different conditions that would typically fall under the loss of independent living, and we'll talk about the specific definition for loss of independent living now. It's defined for us as the permanent loss of 2 or more of the 6 activities of daily living with an elimination period of 180 days. So those include bathing, dressing, toileting, transferring, continence, and eating. Again, this is the only one that has an elimination period. So if they were to have a diagnosis of something like Parkinson's, for example, we would need to have the claim filed. After they meet the 180-day elimination period, they would receive 100% of the value of the face amount of the policy. So if they had a $100,000 policy, after a 180-day waiting period, they would receive $100,000. They would be able to do with those funds whatever they needed to. Unlike a long-term care situation where it's a monthly payout, this is a lump sum payout. Another key difference between us and some of the other policies you may see out there is that if they were to purchase a lifetime plan with American General, they would have full benefit through age 70. So if they have a $100,000 face amount, all 12 conditions are covered through age 70 at the full $100,000. There is no reduction in benefit at age 65. So that is a key difference between us and the competition. The flip side of that is after age 70, although they still have 100% of the face amount, the only thing we would pay on is the loss of independent living benefit, meaning if they had a stroke at age 69, they would get a $100,000 payout. If they had a stroke at 71, they would not receive a payout unless that stroke led to the permanent loss of 2 of the 6 activities of daily living. So after age 70, the only thing that we cover with our policy is the loss of independent living, but it is still the full face amount of the policy. A couple of other key product features. We do have a preventative care benefit, which I talked about, and then a return of premium benefit built into the policy. And I think this is important because a lot of times what I hear from people is, well, why would I want to keep this policy in place if after age 70, the only thing you cover is the loss of independent living? If the primary insured were to be diagnosed with one of the 12 covered conditions prior to age 70, they would receive 100% of the face amount of the policy. If they had the policy after age 70 and they were to die with a policy in place, the beneficiary would receive 100% of the premiums paid into the policy back as a death benefit. So basically, as long as the policy is in force when the person passes away, the minimum that will pay out on this policy is the return of premium upon death. It's key for people to understand because it's a reason for them to keep the policy in place and keep the policy in force. The beneficiary does stand to benefit in the event that they pass away from something other than one of the covered conditions, or that they never have a loss of independent living claim after age 70. Very important for them to understand. So some of the things that can be covered by our Critical Care Plus, and you can see this whole list. But again, these are for the $50 reimbursement, that benefit that we talked about earlier: chest X-rays, colonoscopies, echocardiograms, PSAs, mammograms, Pap tests, stress tests, etc. So this is an annual benefit that anybody who has a policy in place, they could file a claim if they had one of these. It's one per year. They could file a claim and they would receive a $50 reimbursement for getting one of these tests run. A couple of other things that we do differently than the competition. We do offer not only the lifetime plan, but we offer some term plans as well: 10-year, 15, 20, and 30. These are especially important in today's marketplace for those who are trying to find a way to affordably cover themselves or their family with critical illness insurance. Many can't afford a lifetime plan, but maybe they want to do the same thing with this plan that they're doing with term insurance. They want to make sure they have coverage while the kids are still home and while they're saving for the kids to go to college. Maybe they want to cover it for the same duration as they're covering term insurance to protect themselves against their mortgage. Maybe they want to protect themselves until they hit retirement age, so they only want to buy a 10, 15, or 20-year or even a 30-year policy. They have the ability to do that with our policy. So for those of you who are in markets who maybe the premiums are not affordable for a lifetime plan, they do have the options to do one of these term coverage periods. And again, it's a great opportunity for them to talk about very specific things like, do you have term insurance already? Would you like to line up your critical illness insurance to try to be the same duration to cover the same situations? And then that last situation, that last bullet there, succession planning, business continuity. Dave alluded to a conversation that he and I had prior to the call. We will be rolling out a campaign, an advanced market campaign, specifically around business continuity and succession planning, critical illness being a key component that's missing in that plan. So it would not only help to talk to high-end business owners, about life insurance and the succession plan, but also the missing component of critical illness. For those of you who want to join, I will share a couple of those details in a moment. From an underwriting standpoint, we have under 100,000 a situation where all we require is the full application and an RX verification. So anybody who's looking for a simplified type product, if you're doing under 100,000, that's the situation with American General. Anything over 100,000, we're going to require at least a paramedical exam and a blood urine analysis. Depending on their age and the face amount, we can require additional things like an APS or EKG. Again, anything under 100,000 is application and prescription check only. Anything over 100,000 is going to require some full underwriting. The last thing I want to touch on before we wrap the call up is how to build the policy. And I think this is something that a lot of the carriers who are in the critical illness space didn't really do a great job of discussing on the front end. We've got, as an industry, we've gotten a lot better at trying to help you as an agent figure out, okay, I've got someone who's excited now. How much coverage do I offer? Especially for those in the insurance marketplace, like term insurance. They may have purchased $500,000 or $1 million in coverage. So the idea would be, well, maybe I should give them $500,000 in critical illness insurance. Then you run the quote and you realize how expensive $500,000 in critical illness insurance is actually going to be. The key is not that we're trying to help them to pay off the mortgage. The key is we're trying to help them to continue to pay the mortgage. So what we really want to do is we want to ask them, what is their disposable income? What is their monthly budget? How long do they think they would need funds available to cover, whether that's 6 months, 12 months, or 18 months? And is there, are they single? Are they a business owner? Or is there any additional need for any additional income? If you could really boil it down to the basics and say, what is your monthly outlay? Mortgage, car note, credit card debt, and monthly bills. If that adds up to $4,000 a month, would you be more comfortable knowing that you have 6 months of protection available, or 12 months of protection? Or would it be even better for you, for a peace of mind standpoint, to do 18 months? Do that math on a piece of paper, and then now you've got, okay, it's either going to be 25,000, 50,000, 150,000 in coverage, whatever that family would feel more secure with. Again, that's the easiest way to build a policy. Each situation is going to be more specific. Each situation is going to require you to ask some additional questions, and you're going to want to listen to what the customer's needs are. But you definitely don't want to go in there with a $500,000 policy because that's what you can offer when you see the premiums compared to what they might be paying for other types of insurances. But it's a really good mark to hit if you can try to help them to understand. What we're trying to do is make sure that you can continue to pay your mortgage while you're redirecting some other funds to pay for the care that you're receiving, or missing time from work while you're trying to recover. Easiest way to build the correct policy for your insured. So for those of you who want additional information about the AIG Critical Illness Policy, Critical Care Plus, you can email the A&H marketing team at anh.marketing@aglife.com. You can visit our unlocked web address at www.americangeneral.com/illness to get some general information, or you can call our sales desk at 877-399-7747 and hit prompt 1. For those of you who want to continue the conversation, of course you can contact the guys over to AIM, Dave, John, and all the other great sales team members over there. Or if you wanted to reach me directly, again, my name is Paul Gonzalez. I can be reached at 713-831-6208. That's 713-831-6208. I'd be happy to walk you through any additional information that you might have missed from this presentation, or get into some more detail about some specific markets. On Friday, this Friday, we will be hosting the presentation I had alluded to earlier in regards to the buy-sell agreements and critical illness being the missing component in those buy-sell agreements. I'm going to share that information with Dave, so if you had any additional inquiries about how to join or where to dial in, he'll be able to share that information with you. With that, I'm going to turn it back over to Dave and open it up to any questions.
Thanks, Paul. Hang on just a second here. I'm going to grab control back again and throw a little information about me up on the screen. We do appreciate everybody joining us today. I'm going to slowly go and unmute everybody. It's vital that if you have me on a speakerphone that you mute that speakerphone. Otherwise, you'll hear people's dogs barking, dishes being done, whatever, but I am slowly unmuting everybody. My contact information is now showing on the screen. If you do want to get the link to that webinar that American General is going to be hosting this Friday on their marketing strategy for buy-sell agreements, please feel free to send me an email. My email address is right there. And I'd be happy to send that link on to you. If I continue to get too much background noise, I'm going to have to unmute everybody, or mute everybody back off. But if anybody has a question, please do fire away.
Dave, I don't see your email address there on the site.
Right here? Oh, sorry. There you are. You got it now? It's dave.whelan@yaim.com. And our website address is there as well, whyaim.com. I hear a baby in the background.
Sure it is.
Any questions for either Paul or myself?
I have a question.
Fire away.
Are there any jobs, Boilermakers, bricklayers, police officers, firefighters that are excluded from?
Paul, I think he's asking if there are any professions that you do not like to venture into.
Oh no, there are no occupation classes with this type of policy. It really is about their their ability to qualify for the underwriting. So there aren't any exclusions from a standpoint of their occupation. And again, that's why this makes it such a great product for an alternative solution for disability income insurance. It's not disability income insurance, but it does give them additional protection in case their disability is from a situation like a stroke or a heart attack. But definitely firefighters, police officers, those situations are great. They're great target markets for this kind of product.
Okay, thank you.
Is this policy that
Is it available in California?
Yeah.
California, Paul, is it available?
Put it on the table over there.
Paul, did
Yes,
you hear that?
Yes, it is available in California.
This is Kim. I got a question.
Okay, Kim, go ahead.
Yeah, I didn't quite understand. There was 12 events that it covers, and then he went into the loss of the independent living. Is that one of the 12, or is that the way you decide whether or not you're going to cover?
That's one of the 12 covered conditions. It's unique to American General that they do have that loss of independent living.
Yeah. So the way to look at it would be, if there were a diagnosis of lung cancer, for example, and they had a $100,000 policy, they filed a claim, American General would pay them $100,000. But if they had a diagnosis of MS, which is not one of our covered conditions, but that MS led to the loss of 2 of the 6 ADLs, then they would be covered under our 12th condition, which is loss of independent living. And after that 180-day elimination period, they would receive a check. So all the other 11 conditions are upon diagnosis. We would send they file a claim, we would send the check for the face amount or the percentage of the face amount, depending on the diagnosis. But the loss of independent living is the 12th qualifying condition, which covers a lot of things that we didn't specifically list out, like invasive cancer, heart attack, stroke, coma, etc.
Well, the big one would be Alzheimer's.
Correct.
Right? So if
Correct.
they lose 2 of 6 due to Alzheimer's, you'd cover it.
Absolutely.
But you'd have to have the 180-day elimination period.
That's correct.
Before you cover.
That's correct.
Okay.
But unlike long-term care, they don't have to be in a facility. There's not any other qualifying. It's just the diagnosis, and in that diagnosis, the determination by the doctor that they've lost 2 of the 6 ADLs, and then after the elimination period, we're paying the face amount of the policy. So there aren't as many things to check off like a long-term care policy. It really is basically extremely similar to the other 11 conditions, other than the elimination period.
Okay. Now, what did you mean by under 100K that's non-medical underwriting? You didn't really show a page that had the 4 or 5 questions that they have to answer, which is like it is like a medical underwriting, correct?
Well, it's not 4 or 5 questions. It's actually like 20 questions. But what it is an application and prescription check only. So basically, the answers on the questions, they answer the questions on the application, and then we just do an RX verification to make sure it doesn't, doesn't kind of contradict what they checked on the boxes on the application, and then we'll issue a policy. And that's all the underwriting it is. So it's not like if they answer yes to one question that they're knocked out. It's a point system. So there are several different things where they could have, like maybe some preliminary situations that it's not really a diagnosis of anything, but it knocks them down a peg, but it doesn't make them unqualified for coverage. The things that make them not qualifying for coverage, the knockout situations, are actually listed in our producer guide, and it's a list of about 20 things that would make common sense. I mean, if they've already got, if they've already had some of the covered conditions, if they have, any diagnosis of anything that's known to lead those type of situations. But even something like diabetes is not a knockout with this type of policy.
Oh, good.
So there's, it's listed in our ineligible conditions, but the diabetes, it just depends on how long they've had it, how controlled it is, et cetera. But, like I'm just looking at the list. I mean, alcoholism, Alzheimer's disease, aneurysms, previous diagnosis of cancer, coronary artery disease, cystic fibrosis. So, I mean, these are things that you would assume that if somebody's already been diagnosed with one of these things, they're not going to qualify for this type of policy. There also is a height weight chart that they would need to make sure that they hit the height weight chart. So if you want specific details about, some additional details about underwriting, you can definitely look at the producer guide, and that'll give you a lot of the information.
Okay, and then is American General, is that an AIG company?
Yes.
That's how that works. So
yes.
American General actually underwrites this, but they're part of the larger conglomerate AIG.
That's correct.
Okay, thank you.
I have a question. Are there pre-sale brochures and kits available for ordering now?
There are definitely some consumer guides that can be ordered. We don't typically keep the producer guides in the warehouse. What I would also encourage you to do is, if you haven't had a chance to take a look at our playbook for the product, that's something that is a quick, easy thing that you can link to and download PDFs of producer guides, consumer guides, one-page marketing pieces, just some quick generic information. You don't have to log into a website. You don't have to do anything other than click on the link and get to the information. And I will send the link to that playbook to Dave as well to forward on anybody who needs it.
I was just going to ask you that. When you send me the link to the Friday webinar, if you can include the link to the playbook, and anybody who pops me an email or calls me, so pop me a note at dave.whalen@yaim.com. I will reply back with the link to the playbook page and also the link to the Friday webinar. So feel free to do that.
I also missed the last four numbers of AG Life's telephone number that he had up there. I got 877-399. I think it's the last four.
It's 7747.
Did you get that? 7747. Any other questions?
And it's option 1.
Any other questions out there? All right, Paul, as always, thank you very much. We do appreciate taking the time to present with us. And everybody who joined us, thank you very much. Keep an eye on our website for upcoming webinars. And with that, have a great day, everybody.
Thank you very much.